Well, good afternoon, and welcome to Tippy College's webinar on presidential prediction markets and the Iowa electronic markets. My name is Adam McLaughlin, and I'm the Director of Alumni Engagement here at the Tippy College of Business. It's my great pleasure to coordinate today's session and speak with you all. Before we jump into today's main topic, I would like to highlight two upcoming webinars. The first will be on Friday, November 1st at noon, titled The Next Big Thing: Can My Business Idea Become a Reality? Our panelists will share their entrepreneurial journeys and offer tips to help you turn your ideas into reality. I will share the registration link for this webinar in the chat shortly. Our next webinar will take place on Tuesday, December 10th at noon, covering resources at your fingertips, helpful tips from Pomerantz business librarians. The Pomerantz Library offers a variety of resources, and our business librarians will introduce you to tools for entertainment, consumer shopping, and startup businesses. Look for the registration link in your email soon. Tippy College has also released a new podcast called Tippy Leads. In our first season of the podcast, we're looking at employee engagement with groundbreaking faculty research, student and alumni stories, actionable insights, and more. A link for the new Tippy Leads podcast will be provided in the chat. In addition to our webinars and podcasts, we're keeping pretty busy with alumni activities. It's homecoming week here at the University of Iowa, and the Tippy College of Business will be celebrating in style with our annual homecoming barbecue. Join us in the Papa John courtyard before the parade from 4:30 to 6 p.m. and enjoy an evening filled with good food, great company, and engaging conversations with fellow alumni. I'll drop the RSVP link in the chat shortly, and we all look forward to seeing you there. Today's session is being recorded and will be available on the Tippy College's alumni resource page, as well as on our YouTube channel. You will find recordings of past webinars there, all of which are free and open to the public, so feel free to share this information with others. Now, let's dive into today's topic: presidential prediction markets and Iowa electronic markets. People often turn to prediction markets to forecast election outcomes. Our featured speaker, Tom Gruca, the George Daly Professor in Marketing and Director of the Iowa Electronic Markets, will explain how these markets work and what they predict for the upcoming election. We will have time for questions at the end of Tom's presentation. Please use the Q&A button at the bottom of your screen to submit your questions, and feel free to use the chat to communicate with us. With all that, I'll hand things over to Tom. Take it away, Tom.
Thanks, Adam. You have the deep sonorous voice. I'm the one with a face for radio. Today we're going to talk about the IEM and prediction markets because it's something that is of top of mind to a lot of people. But before we get started, I'm going to kind of tell you what the topics are that we're going to be covering. So first, what is a prediction market? So people are hearing about this, but they might not understand what it is. I'll also be talking about Iowa's history of prediction markets. We've been running them since 1988. And after that, I will start talking about our current election markets. We have some for the presidential contest and others about congressional control. There have also been other things in the news about prediction markets, and I will talk about that as well, time permitting. So let's start. What is a prediction market? Well, it's a market. So like any market, it's a place where people buy and sell things. But what are they buying and selling? In this case, they're buying and selling something called a futures contract. Now, most of us, when we sign a contract, let's say we go buy a car, right? And you have to sign a contract, right? I give you X number of dollars, you give me the keys to the car, right? That's what we normally think of a contract. It's executed right now. But a futures contract is one where the value of the contract depends on a future event. Now, if you ever listen to radio in Iowa, you hear about futures all the time. They're talking about November beans and December cattle futures and all those other things. Those are futures markets based on commodity. Our futures markets are based on events. So let's look at some example prediction market contracts. So let's say you have a contract, a Harris contract, and the value of that contract will be $1 if Harris is elected president and 0 otherwise. And we also might offer a Trump contract, where the Trump contract pays $1 if Trump is elected president, or zero otherwise. So when you look at that, you realize that, well, what's that worth? Well, it depends on what happens on election day. So once we establish what the event is, then we move on in creating a prediction market. So the market operator then creates contracts for people to buy, and they can buy them very often from the market, and they can buy them from each other, and they can sell them to each other. Now, you might ask yourself, well, how much do the contracts cost? Well, it depends on how much you're willing to pay or how much others are willing to pay. So, for example, let's say you're 90% convinced that Harris will win. So you would pay up to 90 cents for a Harris contract, because if it does come to fruition, you're going to get $1. Now, if it doesn't come to fruition, you're going to be out, a full 90 cents. Now, you might pay less. So if someone's willing to sell you one for 20 cents, great, right? Because you think it's a 90% chance that event will occur. You can pay less because other people have different opinions, but you should never pay more, because the whole goal of participating in a prediction market is to make money. So that raises the question, well, how do you make money in a prediction market? Well, the key thing here is to trade with your head, not your heart. And people are always trying to figure out what are relationships between prediction markets and polls. Prediction markets are focused on the question, whom do you think will win? While polls are asking you, who do you want to win? And so you may have in your heart of hearts, this is my candidate. I absolutely want this person to win. But when I rationally think about it, and if I were to have to put money on it, yeah, I really think this candidate's going to win. So it sounds really simple, but the way to make money is buy contracts that pay $1 and sell ones that pay 0. And you might say, that seems very simple. It is very simple. These are very easy to set up. Now, in order to make money, you have to have some kind of knowledge, because other people have their own knowledge, their own experience, and of course you need money. Now, the key point here is there have to be differences of opinion across different people in the market. If everyone knows that something's going to happen, like we all have 100% sure that this is going to happen, then there will be no trading, and there will be no opportunity for people to make money, because the prices will go to 1 and 0, and that's it. All trading will stop. But that generally doesn't happen in most election prediction markets. So let's look at a timeline for a typical prediction market. So our markets, we opened them for trading. So we opened up our IEM markets more than a year ago, because there are people who are really interested in the markets that far back. There aren't a ton of them, but sometimes we want to look at how long run of a forecast can we actually get. Then people start buying and selling contracts with each other. There are some, depending on the platform, depending on the prediction market, there are often transactions with the market to get things started, so that people have contracts to buy and sell. And then new information about the election comes out. It could be a poll. It could be the choice of a vice president. It could be any number of things. It could be a scandal. It could be an endorsement. It could be an op-ed piece in a newspaper. Who knows? All these things may affect a trader's belief in who's going to win the election. And because of that, this may change how much they're willing to pay for a particular contract, or if they're holding them, it may change how much they're willing to take. They might say, wow, the person that I really thought was going to win doesn't have as good a chance as I thought. I paid, so much for it, but if it's going to go to 0, I'm going to get the money I can. So they might sell it. Now, why is this valuable? And why is anyone paying attention to this? Well, the main thing is that As people trade and they bring their information and experience and money together in a prediction market, the price of the prediction market that you see for each contract is a trader's overall assessment of the probability the event will happen. Because remember, for most of these contracts, they are valued at $1 if it happens and 0 if it doesn't happen. So if a contract is at 75 cents, that means the consensus of all the traders at that point in time is that there's a 75% chance of that contract paying off $1. And then at the end, after the event, the winning contracts are exchanged for money. If you have a losing contract, you get to keep it because it's worth absolutely nothing. So there's been a lot of news about prediction markets. So I came up with the top 5 reasons why you might be hearing about prediction markets in the news these days. First of all, lack of confidence in traditional polling. Election polls and analytics, where people, take the polls and slice and dice them, did to the public a terrible job in 2016. And so people want more and better information about what's going to be happening in the election. We have an extremely close presidential race. The polls seem to change, poll by poll. And so because of that, it's more difficult to rely on traditional polling to say, oh, everything was within the margin of error, but we still would like to know what's going to happen on election day. And this is something that is new to pretty much this election cycle, is the legalization of sports betting. People are really, really interested in risking their money online. There are a tremendous number of people betting on sports. And personally, I don't wager. I know the only way to make money is to own the casino, but people think, well, I picked the Jets versus the Dolphins, and now suddenly, I can figure out who's going to be president. That may sound crazy, but people have to be fairly overconfident to put their money into something where, unless they have a true advantage over the people who are already in the market. And some of the people are going to make money and some people are going to lose money. And the key thing here is all these people think they know something and they're all bringing their money into the market and registering their projections through exchanging contracts for money with other people in the market. The second thing is for this election cycle, there's some new nonprofit, for-profit prediction markets. One is called Kalshi. There's one you probably heard a lot about in the last few days called Polymarket. Both of those are doing presidential elections for the first time. And then there's a little bit older prediction market called PredictIt. And all of these have their predictions out there. And now in 2 of them, for Kalshi and PredictIt, you could actually participate. You could also participate in the Iowa electronic markets. Polymarket, however, if you're in the United States, you're not allowed to participate in that market. So I want you to keep that in mind for the future. And the number one reason, and you hear people talk about this, and I won't mention who talked about it on the site that he actually owns, that prediction markets are often more accurate than polls. But the big footnote that people do not talk about is basically all of that research was done here at the Tippy College using data from the Iowa electronic markets. And I'll just give you one example of one of the papers. Our forecasts from the vote share market. So we're not predicting who's going to win or lose. We're predicting what the popular vote is going to be on election day. Our forecasts are more accurate than compared to polls 74% of the time. And that's based on a paper that a couple of my colleagues did back in 2008. So we've had subsequent studies that basically show the same thing. And so this is why there's all this interest, because the traditional tools of polling and the newer tools of analytics, people aren't trusting them as much. So there, there's a thought of, let's tap into the wisdom of the crowd. And from that, maybe we can, figure out what's going to happen before everyone else. So um, let's look at Iowa's history in prediction markets. Well, prediction market history started here. We started in 1988 with our first presidential vote share market, and we expanded beyond politics in 1993, and we renamed our exchange the Iowa Electronic Markets. We are a real money futures market. However, you can invest no more than $500 in our market. And we're a futures market, just like the CME, just like other futures markets, but we are not regulated by the CFTC. What they allow us to do, because we're a nonprofit and we're run for teaching and research purposes only, they have sent us something called a no action letter, which basically defines the way we run our markets, the way we run everything. And so long as we stay in our lane, they will take no action against us. So one of the things that we're not allowed to do is to advertise at all. So you might say, "Oh my gosh, I'd love to have heard about this." Yes, but we're not allowed to advertise. It's specifically not allowed in our no action letter. Um, that's a that's a limitation, but I would rather live with that limitation than not have a market. Um, the other really interesting thing about our markets is they run 24/7. So if new information comes out on a late Friday afternoon or the middle of the weekend or 6:30 in the morning on Monday, you can do something about it. Those Wall Street people, they're lazy. They're only open to like 8:30 to 4:30 or something like that. We're open 24/7. So if new information comes out and you think that that will change the outcome of a market you're participating in, you can go in and trade anytime, day or night. We're always open. So I mentioned that we expanded beyond politics. Um, we're best known for our U.S. elections, the national elections, but we've also done state level elections. We've done a large number of elections outside the U.S., and there we have wonderful results as well. Everywhere from um, markets in Germany, Canada, bunch of European countries, and so forth. And the high quality forecasts that we find in the US are replicated in almost all of those situations. I will give you an example of when it doesn't work. So one year that we ran a market on the Mexican election, who's going to be the next president of Mexico, very few of our traders participated because they knew very little about Mexican politics or polling or all the other things you would need to know to accurately predict and make money in the market. And so that market didn't forecast well at all. It was a failure. So prediction markets don't always work. Um, they work when you have a group of people who are motivated um, to share the information they have, and where there's a difference of opinion, where people can negotiate what the consensus would be by exchanging contracts in a market setting. Other things that we have forecast are economic events like the Federal Reserve. This has become a big deal now. We did this for many years, training undergraduate students in economics classes to start thinking about what is the Fed, what's its role in the economy, and what's going to happen at the next Fed meeting. We have some stock earnings and returns markets. We're running one right now for one of our undergrad classes in investments, so that students can invest real money in futures contracts based on the return of a set of stocks over a particular time period. So it's their own money, and it's not like a stock picking game. It's one where people they're rewarded for being good, not being lucky. I don't know why Hurricane Landfall jumped out there, but um, we also started movie box office. This is my first interaction with the IEM back in 1995. I ran the first ever real money movie box office market in the world. We ran a market on Google's IPO price. You may not remember it, but there was no information about it. So we ran a market to see how well we could predict it with no information out there, and it did a pretty good job. And we also have done influenza outbreaks and hurricane landfalls. So the whole idea here is we're doing research on, can a market setting aggregate information which is being held in the minds of a whole bunch of people, and through the incentive of real money contracts, bring this information together and do a good job at forecasting the future. And basically what we found across all the different domains that we've tried out, that yes, in fact we do a good job. So I'm going to get to some of the evidence of how accurate our markets are, because this is something people are always interested in. So how accurate is the IEM? So this is our favorite and most famous graph. The x-axis, of course, is the actual outcome. The y-axis is our prediction. And if we were perfect, every single point would be right on that 45-degree line. And what you see is a lot of them are extremely close. The contracts associated with presidential elections are in red. And you can see for the most part, they are right on that line. Our average absolute error. So we look at our forecast the night before the election and the actual vote share on election day. Our average absolute error is 1.3%. That's why people pay attention to prediction markets, is because they're really very accurate. You'll notice that they're higher for other U.S. elections. Some of that has to do with turnout, things of that nature. And we've got a couple of big outliers here. Paul Tsongas, the Michigan and Illinois primaries. Those of us who are old enough to remember, there was a revelation of a cancer diagnosis like a few days before those primaries. And Paul Tsongas was doing really well in the polls and didn't do very well on election day because new information came out and it wasn't enough time for traders to embed that information into their updating their forecasts and then trading in the marketplace. You'll notice the non-US elections are still very good, within 2%, 2.12%. And for 2020, we had, really good accuracy. 2016 is buried in there too. Again, our forecast here is the forecast of the popular vote, and our forecasts of the popular vote are quite excellent. Now, one of the questions that I'll get into this in a second is what's going to happen in 2024. So we have a couple of markets that we run all the time. We have the presidential election markets, and we have a congressional control markets. We also ran nomination markets, and those were really interesting. If we have time, I can talk about those a little bit, but you can look up what happened in those nomination markets or what's happening in any of our markets 24 hours a day, 7 days a week on our website, and we'll make sure that that website becomes available. So I'm going to first talk about the presidential election markets and then talk a little bit about the congressional control markets. So presidential vote share market, we have two contracts here. And we're looking at the vote share of the two-party vote. The reason we do that is what we found is most of the polls deal with two-party vote. We don't really have a very prominent third-party candidate in this particular election, so we're really only looking at the two-party vote. So the prices are to predict the vote share of the two-party vote. So, for example, if you're holding the Democrat contract and the Democrat gets, let's say, 54% of the popular vote, and you are holding one of those contracts, you get 54 cents. And if you're holding one of the Republican contracts and the Republican gets 46%, you get 46 cents. So these are not the 0-1 contracts. these are what we call vote share contracts. They're a little bit more complex. There's less trading in them because the prices aren't as volatile. There's not as big a payoff. But we have a core set of traders that are really interested in these contracts. So let's look at what it's been done, what's been happening in this market since pretty much since we opened it. The blue line is for the Democrat vote share. The red line is for the Republican, and the green is the number of shares, number of contracts, I should say, which are traded on a single day. You notice there are a couple of peaks, including, and I'm going to point this out here, people can see this, right here. 2 days ago, we had almost 20% of the entire volume of the market traded in a single day. And we saw a great narrowing of the previous pretty sustained lead by the Democrat candidate. And so as of this morning, they are essentially tied. What is interesting is we saw after Biden, we saw a drop off after the debate. We'll see another example of that in a moment, the first debate. And once Biden dropped out, we saw quite a bit of a spike, representing our traders' enthusiasm for the new candidate and the possibilities and things of that nature. But in the last few days, that advantage has narrowed so that they're essentially at this moment tied. Okay, so our second market is something called the winner-take-all market. So we have two contracts. The first is the Democratic contract, pays $1 if the Democratic nominee gets 50%, more than 50% of the two-party popular vote. And we have a Republican contract, which pays $1 if the Republican nominee gets more than 50% of the two-party popular vote. So the prices of these contracts, what they reflect is the probability that the given candidate gets the majority of the two-party vote. So let's look at what those prices have looked like over time. This is a much more popular and much more actively traded market, simply because the outcomes are you make $1 or you make nothing. What is very interesting is the lead the Democratic candidate had pretty much since the start of the market all the way up to and was reaching close to, more than 80% likely to capture the majority of the popular vote. And then the first debate happened. We had a drop, a large intraday drop. We have not calculated the size of that, but that was a move which is larger than almost any move we've seen in any of our markets, winner-take-all markets. And we've been running these winner-takes-all markets since 1992. That debate performance, our traders didn't think much of it. Let's just say the first debate performance. And once Biden dropped out, you can see that there was quite a climb back up. And today, we still have a over 80% chance, it's actually right around 80% chance. Our traders think that there's a 80% chance that the Democrat candidate, in this case, Kamala Harris, will win the popular vote. So those are our two predictions right now. We have basically a tie. This is 2 weeks from the election. A lot of things can happen in 2 weeks from an election. But in terms of the popular vote, while the vote share market suggests that it's too close to call, that it's a tie, our traders in the other winner-takes-all market, they are very convinced that the outcome will be that Kamala Harris will win the popular vote. So let's look at some of our other markets. What's going to happen in the House? So we have 3 different contracts. Republicans currently control the House. Looking at, will they gain seats? Will they hold? So they'll lose some seats, but they'll still hang on. or will they lose the House? And our traders believe there's a 67% chance that Republicans will lose the House. We have a similar market in the Senate. Um, and so we have three possible outcomes. Um, and by control, these are what we call congressional control markets. The party has to hold 50 seats or more than 50 seats or 50 seats plus the vice presidency. Now, one one wrinkle here that sometimes people don't pay attention to is the party has to hold those seats. Independents are independent. So you may have a party with, 49 seats, you know, um, plus an independent, but the independent is independent. We only count people that are actually Democrats or Republicans. Here, irrespective of how we define it, um, our our folks think that Republicans will take the Senate, that they will have either 50 Senate seats plus the vice presidency, or they'll have more than 50 Senate seats. We have a final market that we look at, which we call the congressional control market. And we look at the different combinations. So are we going to have a united Congress, the same party controlling both the House and Senate, or is it going to be split? And what we're seeing, and this shouldn't be a surprise if you're looking at our previous outcomes, that our traders think there's a 50% chance that it'll be a split, that the Democrats will control the House and the Republicans will control the Senate. Now, you might say to yourself, wow, who really cares about that? Well, traditionally, people on Wall Street care about this a lot. And the reason they care about this is when you have divided government, that it is thought that one party will try to take advantage of the other party, or they'll block what people from the House want to do versus people from the Senate, and that spending will be more reserved when one party controls the House and one controls the Senate. Because if one party controls both chambers, and especially if there's also the same party as the president, then people start to really spend money kind of like crazy. And so if people are spending money like crazy, the government's going to have to borrow more money. That's going to crowd out investment for all kinds of other things. And so if I'm trading bonds, if I have a large portfolio of fixed income securities, I'm going to pay a lot of attention to who's going to control Congress and the presidency, because if I'm holding bonds and interest rates go up, all those bonds that I'm holding are suddenly worth less than they were the day before the election. So that's why congressional control is really important to a lot of people. So, so what's new in prediction markets, especially election prediction markets? There are a lot of new options. As I mentioned, PredictIt has been around since 2014. Kalshi just started this month, and Polymarket is basically starting in 2024 to offer markets looking at the presidential campaign. At the same time, there's a tremendous amount of regulatory turmoil. Event markets and election markets fall under the definition of an event market, are regulated by an entity called the Commodity Futures Trading Commission, the CFTC. And they issued a new rule in May of 2024 to ban all election markets from any market that they have purview over. Anyone that they regulate will basically be not allowed to offer election markets. Now, that rule has not gone into effect. There is a certain amount of time for people to comment on the rule and things of that nature. However, because for various reasons, and I can talk about them to the extent that I know, The CFTC has been trying to shut down the PredictIt site since February of 2023. Like us, they operate under a no action letter, but PredictIt is basically run by a for-profit company um, under the auspices, I don't know the exact relationship, with a university. And because PredictIt is operated for the benefit of a for-profit corporation and not for the benefit of the university that actually has the no action letter, the CFTC is trying to shut them down. However, that's going through the courts right now. Kalshi is another group. They have no relationship with any university. They just have been running prediction markets for a while, and they've decided that they're just going to offer um, presidential and other election prediction markets. And too bad if the CFTC doesn't like it. They're just going to do it. And so they are also currently in litigation with the CFTC. The interesting thing is that neither of these actions nor the reactions and lawsuits, and none of this will actually resolve itself before the election. Most of these things will resolve themselves after the election occurs. Polymarket, which I mentioned, and that is trading it using cryptocurrency, has actually been banned from having U.S. traders since 2022. So when you see a lot of things about Polymarket, those are not people from the U.S. And you might say, well, why does that matter? It matters because people that don't live in the country are not necessarily the best traders to understand the nuances of how elections work and um, all the other things you need to be successful as a trader. And you might say, well, how do you know that? Well, we know that because we often run markets where we have US traders trying to predict things that happen in other countries. For example, like the Mexico election. That didn't work. It didn't work at all. At the exact same time, we ran an election market in Taiwan with Taiwanese traders, and that performed absolutely wonderfully. They happened at basically the same time. But in one case, you had people with no information, and in another case, you had people with lots of information. And the market, with the hometown folks, did a great job of predicting what the outcome was because those people had lots of information. And here's the thing: it's not that our traders are dumb or um, you know, they're not experienced. They're smart. They have experience, but they also know they have no advantage. And so they kind of stayed away from the market because they have all they could do is lose money because they didn't know what was gonna happen. So um, I just throw that out as a caveat when you think about places like um, Polymarket. So there've been a lot of attention grabbing headlines. Um, so as you see these, be skeptical, right? Um, because you will see them say things like, highly accurate forecasts and prediction markets always predict better than polls and on and on and on. Neither Kalshi nor Polymarket has successfully predicted a presidential election, whether it's who's going to win, who's going to win the electoral college, who's going to win the popular vote. Neither. They just started. And all of their argument for why we need prediction markets comes from IEM data. And they don't look at our data is coming from vote share markets, not win or lose markets. So that's and if people have questions about that, I can talk about that in excruciating detail of why that makes a huge difference. The other issue with Kalshi and Polymarket is there's no limit to the amount that you can invest. And you might say, well, that's fair because if you're really sure and you have lots of money, you should be able to, buy as many contracts as you want. Yes and no, because there are two things that a prediction market is about. The first thing is that people who have better information make more money. So if you are correct and buy the right contracts and those contracts pay off $1, then you'll have more money than people that buy contracts that pay off 0. So The smarter people make more money. We always want that, especially as Hawkeyes because we're so smart. But at the same time, the reason they're valuable to the public is that under certain circumstances, not every time, but under certain circumstances, that the people who have superior information move prices in the direction of the correct answer. But if you have someone who has lots of money and doesn't care if they make money or don't make money, they can bid up the price of contracts, which will eventually pay off at zero. Now, in our market, in the IEM, we have a limit of $500. In Predict It, they have a limit of $850. So if you have someone who's trying to manipulate the market, people will be happy to sell them losing contracts. We call it, buying nickels for a dollar. And if you're buying nickels for a dollar, you eventually run out of money. And then the price of that contract, it was artificially inflated, and then it drops right back down to what the consensus says it should be. So in these other markets where there are no limits, that doesn't necessarily happen, because you could have people who have way more money and don't care what happens to it. And in that case, the market prices will not be good predictors of what the outcome is, because they're being manipulated intentionally or through ignorance. Either one, we don't know. And the prices will be uninformative. Now, at the end of the day, the people that know what's going to happen, they're going to end up with all the winning contracts. And the people that don't know, they'll end up with all the losing contracts. But before the event, the prices might not be informative at all. Predict It is another one. They missed in 2016, and they Predict It was right in 2020. They have a 50% success rate in picking elections, which is, if I remember, is a coin flip. So when people say, "Oh yeah, they always work," that's not true. And we've run enough of them outside the domain of politics to know what we're talking about. Now, the good thing about Predict It, though, is it's very hard to manipulate predicted prices, because there are plenty of people in there who are vigilant of watching people, buying up things that are going to pay zero, because that's a way to make money. Sell people things that are valueless for more than $0. That's a good way to make money. So there are plenty of people willing to do that. And so their prices are much less subject to manipulation than in either Kalshi or Polymarket. So to wrap our summary of our IEM forecasts, I wrote this slide the day before yesterday. We have a tie. So up until yesterday, we saw Harris likely to win. I should amend that. We see a tie for the popular vote. From the vote share, however, from the winner-take-all market, they still have an 80% chance that Harris will win the popular vote. The prediction margin is actually smaller. It has, in 2 days, it had expanded a couple of days ago, and now it got smaller. So there's actually still a great deal of uncertainty of what's going to happen on election day. There's still some uncertainty regarding the Senate, but it looks pretty clear that the Republicans will take the Senate, but it is also very likely that they're going to lose the House. So I wanted to leave time for questions, because I'm sure there are a million questions. So I'm going to leave it at that. And Adam, I assume you want me to stop sharing?
No, you can go ahead and keep that up. That's just
All right.
fine.
Yeah,
Yes,
got to keep the most powerful brand in sports, academia, and everything else.
that's right. We actually did have a few questions
Sure.
here. The first question is, with the current presidential race that's happening,
Yeah.
how did you adjust to account for Harris becoming the presidential candidate rather than VP? There's been a few questions that have stacked
Sure.
up
That's a good
right
question.
around the same thing.
So as our traders will know, that we do not put names on on contracts, except in nomination markets. We have the unnamed Democratic or the unnamed Republican as our contract names. And the reason we do that is people drop out, people get sick for whatever reason. So if you look at the contract names, they're not Trump and Harris, they are Republican and they are Democrat. And there's another reason we did that, especially in this election. Remember, we started out these markets way back when in 2023, which seems like a million years ago. Um, but we had the two leading candidates. Um, I don't want to say this because my mom lives in Florida, uh, but they're like 80 something years old. Uh, are they going to live long enough to actually run for election? Maybe, maybe not. And so if we start putting out named uh, contracts in these other markets, and then things change because the candidate changes. So we had to make no change at all. It's our traders who made the adjustment. So we use parting. We don't use people because the
Yeah,
party will still have a nominee no matter what.
excellent. That's great follow-up. For the presidential election, another question that came through, why is the focus on the popular vote versus the winner based on the electoral college?
That's a great question. Uh, a couple of reasons. First of all, um, if you look at popular vote, we have many, 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 many examples of forecasts of what's going to happen on election day for popular vote. In fact, one comes out every 3 days. It's called a poll. And so the purpose of, again, we're research based, is to figure out, can markets do better than the second best option? The second best option being a poll. Now, think about what information is there, what forecasts are available for traders to leverage in their trading about what the count for a for the electoral college is. So, what are the top 5 sources of that information? There are none. That's the correct answer. There are none. People can put those things together themselves, and they can, go all Nate Silver on you, and build an election model and things of that nature. Then we see, even he doesn't do that anymore. Uh, and the reason is because um, that's an aggregation of not just 2 outcomes, but lots and lots of different possible outcomes. Um, and that's the first reason, because we're trying to see, do markets do better than the second best? And for electoral college, there is no second best option to compare against. And if you think of the outcome is win or lose. And most of those win or lose questions, for those of you who've had a probability class, you know that the greatest uncertainty in any probability is around 50-50. Now there's a second and there's another set of reasons. When is a person elected? And we saw that there's a mostly hidden, but was made very uh, salient in the last election cycle about all the steps of the electoral college and electors and certifying the vote and going to Washington and doing this and doing that and on and on and on. And it's kind of the same reason that we don't use names, and we don't say who's going to win, because the win doesn't happen until somebody stands there, puts their hand on the Bible and say, I solemnly swear. Now, when does that occur? That occurs in January. When does the election occur? The election occurs in November. Our traders want to be paid when they're right. They want to be paid now. They don't want to sit around for 3 or 4 months or 2 or 3 months and just say, well, I got all that, sweet IEM cash, coming my way. They want, they were right. They want their money. They want their money right now. Um, and because all kinds of different things could happen, if there's a tie, and if there's, all these, it could be thrown into the Senate. And I, I wasn't that good at civics. I don't remember all the steps, but I know there are a lot of steps. Um, Now, remember that we are a real money futures market. So if you read our prospectus, we tell you exactly what information we use and how we're going to pay off and contingencies and things of that nature. So imagine how long our prospectus would be if we described every possible contingency, including the death of a candidate, the removal of a candidate, on and on and on. If we were to write out all those possibilities in our prospectus document, it would be like, a credit card, you know, disclosure. It would be 45 pages long and no one would read it. Um, but we're still bound to it, and you as a trader are still bound to it. We decided to stay much more simple. And the reason the CFTC lets us do what we do and leaves us alone uh, is we stay in our lane and we are allowed to run political markets because we're looking at the question, how well do markets do versus polls? That's in our letter. So we try to stay as close as possible to the letter of that allows us to operate.
Awesome. Thanks, Tom. Kind of shifting gears, you talked earlier about, there's times where you do non-political markets where you're
Yep,
looking at those like, movie box office as one example. How do you recruit traders to that market, especially since you cannot advertise?
sure. So movie box office is a really interesting one. For many years, I had my MBA students in my marketing management class. We gave them accounts, and we had them. Um, some of my MBAs are now shaking their heads. They're like, they remember how painful this was. And what they had to do is, um, so students are always asking us, can we use the internet? There's not enough information. We want to use the internet to do the assignment. So I created this assignment so that I would say, good, go use the internet. Look at how well this movie might do. Look at all the information there is about movies. And if you start typing in information about movies, it's billions of pages. Um, and so the students had to distill all of this information down into one number. What is this movie how's it going to perform at the box office in the first 4 weeks? And then they would trade on that information. And we gave them the money to do that. Actually, the program gave them the money. And so that's how we recruited people. When we were able to open these up to all academic traders, we had sufficient number of academic traders at other schools who could have put their own money into it. But a really weird story for the CFTC is until about 2010, you could have all kinds of different futures contracts, but there was one thing you couldn't do, and that was onions, because of course onions, who doesn't love onions? Well, they had futures contracts in Vidalia onions, and somebody cornered the market in Vidalia onions. And there's one crop a year. So no more onion futures contracts. Now, the second one that they've specifically banned by name is movie box office. So we can no longer run them with people who are actually risking their own money. And the reason they did was a set of people, Wall Street types, said, hey, wouldn't it be nice if you're producing a movie and you think, well, if this thing's going to be a flop, I might lose $20 million. If there's a futures market on the box office, I could hedge my investment. Now, for someone investing, 200, $400 million in a movie, that seems like a great idea. But to a director or a movie star, so if you see the prediction market for your movie suddenly going down, down, down before it comes out, that could ruin your reputation as a director. It could ruin your reputation as an actor. So for the first time ever, the Screen Actors Guild and the Directors Guild went before Congress and asked Congress to just ban these altogether. And the reason they did, it sounds kind of silly, is it would ruin one of the most important exports that we have as a country. We export a lot of movies, and this could ruin the movie business. And since it could ruin the movie business, it's not in the public interest to have that sort of market. So we're going to specifically ban it. We continue to do it with our students where we stake to them. That's okay because they're not risking their own money. And we learned an awful lot about how markets work because, the political ones only come around every 4 years. And if you think about, we've been doing this since '88. We only have like 9 markets to look at. And all of you who are, Hawkeyes who took statistics realize, don't you need 30 observations? Yeah, it would help to have 30 observations, but I don't know if I'll be here for 30 more cycles, right? I don't know who's going to be here for 30 more cycles. So we have to do research in other domains where we can have a lot of repetitions and we understand how markets work in terms of information, like how information gets embedded into prices, what benefit there is to having better information versus being a good trader. All these different questions about how prediction markets work. A lot of that comes not from our political markets because those are relatively rare, but from our, for example, movie prediction markets, our returns markets that we do with students and things of that nature. So that's part of our research enterprise.
Wonderful. Well, Tom, thank you so much for answering those questions. A big thank you to Tom for today's excellent presentation, a job very well done. I just want to remind our viewers that the webinar has been recorded and will be available at the Tippy College website under Alumni Resources page, as well as on our YouTube channel. And right after this webinar, there'll be a brief survey that you'll see that'll appear in your browser. We'd greatly appreciate it if you take a moment to share your feedback with us to help enhance our future programs. On behalf of Tippy College, I just want to thank you all for joining us today. And as always, go Hawks.